Hello everyone, today I will be introducing Public Bank Berhad, one of Malaysia's leading banks. It was founded in 1966 by Tan Sri Datuk Sri Dr. Teh Hong Piao with the vision of being a bank for the people. Public Bank provide a wide range of service including personal and corporate banking, Islamic banking, investment banking, unit trust fund and insurance. The bank operates mainly in Malaysia but also has branch in Hong Kong, Cambodia and Vietnam. Its main goal is to offer efficient, customer-focused and innovative financial service while maintaining strong financial stability and sustainable growth. Since being listed on Bursa Malaysia in 1967, Public Bank has remained one of the most stable and profitable banks in the region.
Hello everyone, today I will present the Independent Auditor's Report of Public Bank Berhad for the financial year ended 31st December 2024. The report was addressed to the members of the company and the audit was carried out by Ernst & Young PLT, a well-known audit firm in Malaysia. The auditors examined the financial statement of both the group and the bank, including the statement of financial position, profit or loss, and cash flows for the year. Next, the audit followed the approved auditing standards in Malaysia and the international standards on auditing. The auditors confirmed that had enough evidence to support the opinion. In their opinion, the financial statement gave a true and fair view of Public Bank Berhad's financial position and performance in line with MFRS, IFRS, and the Companies Act 2016. So, there was no emphasis of meta paragraph showing that there were no major issues found during the audit. The auditor's report was dated 26 February 2025 after approval by the Board of Directors. Overall, this reflects that Public Bank Berhad's financial reporting is transparent, accurate, and reliable.
So today I will present topic 2, completing the audit process under ISA 516. For task 2, there are three main parts. The first one is subsequent event, second contingent liability, third is commitment. First, subsequent event means something that happened after the financial year has ended. For example, on 26 February 2025, the company declared a second interim dividend of 11 cents with a total amount of over 2.1 billion ringgit. Second is contingent liability, mean a possible future obligation. For instance, direct credit of 912,000 and transaction-related item of 1.9 billion ringgit. Third is commitment, refer to future responsibility or promise made by the company. For example, commitment over 1 year of 40 million ringgit and less than 1 year of 29 million ringgit with a total of 91 million ringgit. In conclusion, there three elements are important in issue a company financial statement are complete and accurate.
Present my part, that is subsequent event. Why is disclosed as the event occur after reporting data than before the financial statement are authorized for the issue? Impact on the user or use, whether the event occur near the figure adjusting event or only provide and no for future opportunity for non-adjusting event. For example, Public Bank and declaration of interim dividend on 2026 does not change the 2024 profit. It shows the shareholder about the future cash outflow in 2025. Relevant help user understand the ongoing financial position beyond the reporting data are assessed and management confident in the future performance. In contingent liability, what is this obligation arising from past event drop and uncertain more outcome lawsuit? Guarantee or regulatory action are not recognized as liability and obligation profitable for unmeasurable. User must understand the potential financial that risk may be solvency in the future. Disclose ensuring transparency about the possible loss. For example, Public Bank face a pending legal case of guaranteed exposure. Investor can be considered as potential financial impact. Ensure that there are uncertain obligation influence can invest in credit decision through we are not yet recorded in the account. While the commitment, while commitment are contract and obligation that are known as study credit line in the bank are agreed to future. They are not recognized as liability, but they are future finding in the service obligation. Impact of user can be assessed in the bank in liquidity and follow and risk exposure. For instance, Public Bank outstanding credit line, and 5. Facility for show the amounts bank might finance in the future. Given us user a view for the bank, future obligation and risk exposure, helping they evaluate financial stability and resources of management.
Next, I will present about the audit on financial statement, focusing on loans, advances, and financing, which is significant account balance. This account is very significant because it represents 77% of the total asset as at 31 December 2024. It is highly material, so even a small error can affect the company's financial statement. It is also subject to expected credit loss assessment, or ECL, under MFRS 9, which involves a lot of judgment and estimation. This means it directly impacts the company's profitability and risk exposure. The suitable audit assumptions for this account is valuation and allocation. This ensures that loans are recorded at the correct carrying amount after deducting any impairment losses. Auditors also need to confirm that the ECL is properly estimated according to MFRS 9. Thank you.
For the valuation and allocation audit assertion, we perform 4 main procedures. Firstly, review the expected credit loss model to ensure it follows MFRS 9 and includes key elements like probability of default, loss given default, and exposure at default. Secondly, recalculated impairment allowance for selected loans to check the accuracy of management figures. Next, verified supporting documents such as loan agreement, collateral values, and repayment record to ensure all balances are properly supported. Lastly, compare impairment ratios, non-performing loans, and loan growth with previous year and industry data to spot any unusual trends. That's all from us. Thank you.